Hey everyone, welcome back to my channel. This is Ben Morales, your personal financial coach. And in this channel, we talk a lot about velocity banking. And obviously, if you're going to use velocity banking, that means that you have to have a debt tool. So you can have a credit card, you can have a personal line of credit. We're going to be talking about home equity line of credit in this video. You could also have a business line of credit. But if you're trying to pay off debt and you're utilizing the velocity banking strategy, you need to work with a bank that's going to give you the ability to do so. And so sadly, this video is if you find yourself in the position like we're going to show in this video, and your bank is not helping you to get a home equity line of credit, and instead when you go to the bank and you sit down with the banker, they simply talk about loans, and they simply talk about a product that's going to extend the time of you being in credit or in the loan with the lower payment. That's not the best strategy for you. You can see the other videos that I've done around that, especially one in particular called What Happens When You Refinance. In that video, I highlight how it starts the time all over again when you do refinance. Like when you're refinancing your home, you start the upfront cost of interest all over again, and it becomes a perpetual hole that you're never able to dig out of. So this video is basically highlighting where Chase is at right now. So right now, Chase has about 2 trillion, I think it is, in deposits. That's what they hold, right? In their portfolio, they have about $2 trillion in deposits. They also have 1.3, I think it is, trillion dollars in mortgage loans for consumers, right? So everyone basically has any kind of loan, mortgage loan with Chase, you're part of the 1.3 trillion. Okay, so that basically is where your money is trapped. And I want you to recognize that your money is trapped if you have a loan, even if it's not with Chase, right? I'm only bringing up Chase because they just happen to be the biggest bank in the United States. And they happen to be the bank that, being the biggest bank, they're not offering HELOCs. So why aren't they offering HELOCs? Well, in March of 2020, something happened that changed the world, right? We all know what it was. That was COVID, right? So the very next month, April 2020, Chase made an announcement. Right after they started to open up their lending guidelines a little bit, they made an announcement, and that announcement was no more HELOCs. Now, back then when they announced that, it was supposed to be a temporary fix, right? They said, well, due to the uncertainties of the financial markets, obviously what was going on with service, we're going to hold back on offering HELOCs. And if you remember 2008, that's what happened. A lot of people were getting HELOCs, and the values of the homes, because of that crash, dropped, and people started to foreclose on their properties and not pay their HELOCs and things like that. So that's the approach that they took in 2020 as well. They said, we're not going to do HELOCs anymore. So what they did offer, they said, hey, you're more than welcome to refinance with us, right? According to them, and this is information on the internet, you can look at it, I'm not just saying it. According to them, they said, well, most of our clients want to refinance anyway. Well, there was a different market there, right? The rates were a lot lower, and the values of the home were creepily going up little by little. So if you refinance, what happens when you refinance? Again, the video that I did it shows you that you basically start the cycle of being in that upfront interest cost again. That's what happens. So they welcome you to refinance. They're not going to give you access to your home equity line of credit. So what that means for you, right, if you're banking with them, right, and you're trying to get out of credit or you're trying to get out of debt, you're trying to utilize velocity banking because you've been educating yourself on how it works and the strategy and how it's used. That means if in 2020 you bought a home and you bought that home for $100,000, well, from 2020 to 2025, your home, the value of your home has gone up between 35 and 50%. So that means that your home today is worth somewhere between 130 to 150,000. So there is equity right here. In both instances, there's equity. So if you have, right, a mortgage, that equity has gone up in 5 years. It's gone up significantly, right? And typically what has happened in that 5 years, more people have incurred more debt. And now they're looking for answers to try and get out of debt, and particularly with how inflation is and the cost of things are right now. So the debt tool of a home equity line of credit will allow you to do that. If you want help with that, go through my other videos. You'll be able to see exactly the benefits of a home equity line of credit. But Chase, in other words, is keeping, right, the bank that has the most in deposits, right, is keeping your money trapped by not offering you a home equity line of credit. What that means is you're going to have to shop elsewhere. You're going to have to go out of the norm. That what you know, like I tell my clients all the time, don't just stay with a bank because it was a bank that you started when you were 14, 15, 16 years old. It was the account that you opened with your parent. It was the account that was offered to you when you were in college and they came to your college or university to help you set up an account. Don't just stay with the bank just because it was the bank that you first had. If you're in this situation, right, if you need a home equity line of credit, or you can potentially get a home equity line of credit to help you pay off the debt, then you need to start making changes, right? You need to start making moves. You need to start establishing relationships at other institutions that will allow you to have a home equity line of credit. So this is going to be to your advantage, because once you start tapping into your home equity line of credit, you can implement the velocity banking strategy, and you can start to eliminate your debt a lot quicker. Home equity lines of credit, the rates are dropping right now. The market right now is such where the drapes are dropping. They're not going as quickly as anticipated last year, but they still are dropping. So take advantage of it. As I do my research, I'm finding that more and more banks, especially credit unions, they're offering a period of sometimes 12 months, 6 months, 12 months, where you can get an introduction period and take advantage of a low introductory rate. So just wanted to do this video and inform you. Keep this in mind, right? Don't stay with the bank just because it's your first bank. Move your accounts, start finding out what other banks have to offer, start establishing a relationship with them. So hope this video has helped you today. Please leave a comment, share, like, subscribe, all that good stuff. And I definitely appreciate you tuning in. And until the next video, we will see you then.